Dear viewers, welcome to this special episode on Budget 2024. We just heard Nirmala Sitharaman, the Finance Minister, presenting her budget on 23rd of July 2024. This is the first of the budget from the newly elected government. We are all curious to know what provisions are there in this budget. How does it impact NRIs in particular? How does it impact our taxes that we pay to the government? Are there any reliefs, etc.? In this episode, I'm going to talk to Expert of the Week, Chartered Accountant C.A. Sriram, to know the budgetary provisions. Stay till the end of the video. There are very fine points which all of us need to know. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the budget provisions of 2024 budget presented by Nirmala Sitharaman, I have invited to this conversation today Expert of the Week, Chartered Accountant C.A. Sriram. C.A. Sriram is a popular faculty on our channel. You have seen him in multiple videos. I'm talking about the multiple topics of interest to NRIs. He is a practitioner of direct taxes. He has a established NRI practice, helping the NRI community in solving their tax-related issue. Mr. C.A. Sriram, welcome to this special episode.
Thank you.
Sriram, I heard the budget from the start till the end. For me, it looks like a non-event, but the devil is in the detail. You have also gone through the budget in fine print. Is there anything specific provisions in the budget which will affect the NRI community alone?
First of all, let me just give a clarification or kind of a disclaimer what I would see, or certain information rather. This budget, whatever announcements are made, they are only proposals, and they are proposed changes which are supposed to be further approved by Rajya Sabha, as well as the President has to give his assent. So, hence, as on date, it's only a proposal which has been given by the Finance Ministry. Further, these amendments are applicable from this financial year for this financial year 24-23, relevant to assessment year 25-26 onwards. And for the earlier financial year where one would be filing their return of income now, for them, this budget will not have any impact. So with this, I will now go on to answer your query. Now your query is whether there is any specific provision which is impacting the non-resident individual. So in my view, unless a non-resident individual having any business transactions with the countries outside of India or with India, etc., for a normal non-resident individual who is having investment incomes or say other related capital gains, etc., for them, there is no specific provision which is only impacting the non-resident. All the provisions, whatever has been, amended or, freshly introduced, etc., are going to impact all individuals alike, whether they are resident or non-resident. There is no specific provision as such.
We heard the Finance Minister making sensational announcement that because of this budget, people can save 17,500 tax. What is that she has tweaked in the income tax slab, how she has altered it, and how is the general public is going to get benefited?
See, when the Finance Minister has announced this, she had made changes only in the new tax regime that has been introduced, and last year it was actually revamped entirely, and a new set of tax slabs has been introduced, which was having 6 different tax slabs. So it was going like this: 0 to 3 lakh, there was no tax. 3 to 6, there was 5%. 6 to 9, there was 10%. 9 to 12, there was 15%. 12 to 15, there was 20% rate of tax. And 15 lakhs and above, the rate of tax was 30%. So if a person who was, say, earning 15 lakh income approximately, he would have ended up paying about 1.5 lakhs as his tax liability. So now this new scheme of taxes, only new scheme, not old scheme, only new scheme of taxes has been tweaked a little bit, because of which there is a benefit of going to be about 10,000 rupees just because of the changes in the slab rates. That is, now that slab rate for this financial year, 24-25 financial year onwards, it will be under the new scheme 0 to 3 lakh, 0%, 3 to 7 lakhs, 5%, 7 to 10 lakhs, 10%, 10 to 12 lakhs, 15%, 12 to 15 lakh, 20%, 15 lakhs and above 30%. So because of this, the final tax liability, if at all a person is earning 15 lakh of income, that would be around 1,40,000. So there is a roughly saving of about 10,000 in amount of tax if one is having an income of about 15 lakhs. So this is what the basic understanding.
But how did she make a comment that the persons will save 17,000?
Yeah. Now, along with this change in the normal, slab rate of taxes, the finance minister has also made a amendment in respect of standard deduction, which is available on the salary income per se. So, under the new tax regime, there is also under the old tax regime, there is also a standard deduction of rupees 50,000, which is available presently from the income chargeable head under the head salaries. Now, this standard deduction of 50,000 has increased to 75,000 if a person is opting for a new regime for the future years. Here, what is going to happen is if there is an increase of 25,000 standard deduction, because if at all that 25,000 standard deduction is coming in the 30% slab rate. So there is a roughly tax of 7,500 which is being saved by the SSC. So because of the slab rate 10,000 variation, because of increase in the standard deduction 7,500. So overall it will become 17,500 additional benefit for the individuals. So now it is applicable to the individuals, but when it comes to non-resident, normally they will not have any salary income in India. That is where 7,500 benefit may not be applicable to a non-resident in India, unless because if there is a pensioner, because the pension is also an income which is taxable under the head salary. So if he is earning a pension, obviously he will get that increased standard deduction on the pension as well. So he may end up getting benefit. Otherwise, because of the slab rate, it is 10,000. Because of standard deduction, it may go up to 7,500. So max to max, there would be benefit of 17,500 for an individual because of the changes in the slab rate and standard deduction. That's what meant by the Honorable Finance Minister.
One thing we have seen with this government in the last 10 years and continuing into the 11th year now is tax rationalization measures, simplification of tax systems, making it easier. One of the major proposals which I observed during the budget presentation is changes in the capital gains tax. It gives a feeling that the capital gains has increased. What changes the finance minister has made and how does it impact the common man on the street?
When it comes to capital gain taxes, one need to understand that, there are two types of capital gains. One is short-term capital gain and another is long-term capital gain. When it comes to, say, short-term capital gain, what used to happen is if at all a person is holding equity shares or equity-oriented mutual fund, then on such short-term capital gains earned from these equity shares, listed equity shares or listed equity oriented mutual fund, there was a short-term capital gain tax rate applicable at the rate of 15% and the holding period is 12 months. That holding period continues to be 12 months. Within 12 months means short-term, more than 12 months means long-term. But this rate of tax from 15%, it got increased to 20%. So it is actually, like saying that you hold it for more than 1 year and make it a long-term. That is the proposal. And also there is small changes in the holding period for many other assets. For example, if somebody is holding a jewelry or archaeological collections, drawings or certain other capital asset, which were having holding period of 36 months earlier, that is 3 years approximately, that holding period has been brought down to 24 months, that is 2 years. Meaning thereby, if a person is holding any asset other than equity shares or equity oriented mutual fund and certain another couple of assets are also there which are having a holding period of 12 months. For other assets, the holding period is 24 months. If at all he is holding for more than 24 months, then it becomes a long-term asset. It will earn a long-term capital gain. So the holding period has been brought down. So there is a broadly additional benefit which is being given to the SSC in terms of the holding period. Further, now let us come to the long-term capital gain. Now there are certain long-term capital gain which were earned out of equity shares or equity-oriented mutual funds. They were getting taxed at the rate of 10% for an amount of capital gains from those assets exceeding rupees 1 lakh. Now this rate of 10% has been increased to 12.5%. That is one change. And the exclusion of income of long-term capital gain from equity or equity-oriented fund has also been increased from 1 lakh to 1 lakh 25. So up to 1 lakh 25, there will not be any taxation on these long-term capital gains from equity and equity-oriented mutual funds. More than that, it will attract a tax at 12.5%. Apart from these, there are several other assets for which the rate of tax was 20%. Under these factor circumstances, the long-term capital gain, also the rate of long-term capital gain or tax rate on long-term capital gain on all the assets apart from equity or equity-oriented mutual fund has also been brought down to 12.5% from 20%. However, while the people were getting charged to tax at 20% on long-term capital gain, they were also getting indexation benefit so that the cost would be aligned with the inflation to today's date. But anymore, since the rate of tax has been brought to 12.5%, no indexation benefit will be given to the SSC. That is where, they are trying to bring certain kind of parity. So henceforth, if at all a person is earning capital gain from sale of any asset which is termed as a long-term capital gain, then the rate of tax on that will be 12.5%. And there will not be any indexation eligible for that particular SSC.
I have a follow-up question to ask you. Now, in case of property sales, we understood that there is no indexation and the long-term capital gains has been capped at 12.5%. And across the asset classes, it remains the same. But there were other provisions earlier, like, I have to save the taxes, I can use 54 EC bonds and other things. Are these provisions still in place or they have also been tweaked?
No, these provisions will continue. If at all a person is having long-term capital gain, then that person can always avail the benefit of reinvesting those long-term capital gains, say into residential house or bonds, etc. Those provisions still continue, and such benefits of claiming deduction of the capital gains from long-term capital asset, that is always available to the SSC in future also. There is no amendment or tweaking of that as of now under this finance bill.
When we read through the budget fine print and when we hear this Nirmala Sitharaman, two feelings come together. One, we are happy that the tax rates have been simplified, commonality, the way you look at different assets, the holding period, you don't have to have too much of a knowledge around that. That's all is fine. Now it comes to the property tax. From 20% it has been brought down to 12.5%, whereas the indexation is taken out. Probably the days of indexation benefit is out of the window from here onwards. However, in case of long-term capital gains on the equity mutual funds or equity-related instruments has gone up to 12.5%. All in all, finally, did the investor lose money or did the investor made money because of these new proposals?
See, it can be both ways. I will explain you. If at all a person is having investment in the form of listed equity shares or listed equity-oriented mutual funds, the rate of tax has increased from 10 to 12.5%. That means at least to the extent of 2.5%, he will be at the losing end. Earlier also on these shares which were bought taxed at 10%, there was no indexation benefit. So definitely the person will be at the losing end if he is having to the extent of equity shares or equity-oriented mutual funds. Definitely is losing a small bit of chunk because additional tax is supposed to pay now. However, when it comes to any other asset which were supposed to get taxed at 20%, so in that regard, there can also be a benefit to the SSC because of reduction in the rate of taxes. Say for example, the SSC bought a land on say 1/4/2001. For the ease of understanding, I'm giving that date because that was the date from there the indexation will start. Okay, so he had bought land on 1/4/2001, say for 1 lakh rupees, and now he is going to sell it at 10 lakh rupees. So there will be a capital gain of 9 lakh henceforth because there is no indexation benefit available. On this 9 lakh, there will be rate of tax of 12.5%, right? So now because of this 12.5% rate of taxes, he is going to pay about 1,12,500 as his tax liability. Whereas if he had gone back to the earlier regime where that indexation benefit was available, the amount of 100 or 1 lakh rupee would have increased to 3,63,000 rupees as on date because the indexation is 363. So it will increase by 3.63. So because of that, his capital gain would have been about 537. That is 5,37,000. That is 10 lakh minus 3,63. 5,37,000 would have been his capital gain. So that being the case, if you are applying the rate of tax of 20%, then it will give almost a parity of the amount of tax what would have been paid by the SSC. And obviously under the new scheme, the rate of tax will be much lesser at 10%. So when it comes to the other way around, say instead of he is not able to sell at 10 lakh, instead he is selling at say 6 lakh, that is much lesser than that. At that time, the old tax would have been more beneficial to him, because from 6 lakh he is going to deduct 3,63,000. Only on 2,37,000 he would have paid 20% rate of tax, which was about 47,000. Whereas now on 5 lakh he is paying 12.5%. So which is more than 50,000. So obviously there is more tax outflow for him under the new tax regime. So it is better that if he has got a bigger capital gain margin, then obviously the new tax rate of 12.5% will be beneficial. If he has got lower margin of profit or long-term capital gain, then obviously the old would have been much more beneficial. So there is a mixed, I cannot definitely say every time it's going to be beneficial, or I cannot definitely say every time it's going to be non-beneficial to the assessor because of this reduction in the rate of tax.
So the proposals are, we can say, in a way, kind of a neutral. Whether you gain or whether you stand to lose because of the proposal depends on the circumstances in which you are in.
Yes.
So it could be beneficial to you, it may not be that beneficial to you. Both are a possibility. We probably have to see it only from a simplification of taxes, computation, easiness around computation. That's the way we have to look.
Yes, absolutely.
One another thing which is of interest to NRIs is, because of this budget proposals, there are NRIs living in different countries. These countries have got a double tax avoidance agreement between those countries and India. Will the DTA arrangements will also get tampered because of this, or it's the life normal with DTA and only the tax structures which will change here?
See, the DTA provisions are agreements between two countries. The budget amendments, etc., are unilateral, that is specific to India alone. So it is always beneficial for one to look into DTA provision. And definitely these budget proposals or amendments in budget will not have any impact on the DTA, that is for sure. So it is ultimately that when it comes to availing the benefit of DTA, one need to look at to fact and circumstances, whichever is beneficial he need to adopt. But because of these budget proposals or amendments in the budget, in the domestic law, which is unilateral, it will not have any impact on the DTA, which is bilateral.
This particular budget, unlike other budgets, has given rise to one other problem. Now, there was an interim budget prior to this elections, and now it's a full budget, but it is coming on 23rd of July. There are people who have done transaction prior to 23rd of July, equity selling, mutual fund selling, and various transactions. Now, how does this cutoff date impact the transactions? Will the new proposal will become impacting the transactions which happen after 23rd July, or for all transactions which are happening 1st April onwards, the new proposals will be applied?
See, it depends. Each and every transaction or each and every amendment are unique in their own way. Most of the cases, if at all a beneficial provision to the SSC, they will be given from retrospective effect from 1st of April 24 onwards. And those provisions which may not be so having a benefit to the SSC, then those kind of provisions either will be prospective, that is from this day onwards, or they would specify a particular day from which it will be applicable. So likewise, say now all these capital gain transactions or amendments in the rate of taxes, the no indexation benefit, etc., they will have impact from the date of budget. So meaning thereby, if at all a transaction has been executed between 1st of April 24 to 22nd of July 2024, then for all those transactions, old tax rules and old tax rate, indexation benefit, everything will apply. Whereas a transaction which has been executed on or after 23rd of July 2024, for them, all the new provisions would apply. So it is always prospective. Unless the provisions are beneficial, say for example, the slab rates, you cannot actually bifurcate for one part of the year different slab rate, and another part of the year, one more slab rate. And the slab rate which has been proposed is also more beneficial to this. That's why it is applicable for all the incomes earned throughout the year from 1st of April itself.
So it's easy to remember here. Wherever you compute things based on your annual computation, see your income or these other things, then you take April 1st as the date from which you will compute this. But if it is something which is related to a transaction, which has a cutoff date, like your capital gains, when did you sell, when did you buy, when did the capital gains arise? In such cases, you can consider if it has happened after 23rd of July, the date on which the budget is presented. From there onwards, the new provisions will apply. One another word which is making the round post the budget is the word called the angel tax.
Yeah.
What is this angel tax? Does it have a bearing on the common man? To whom does it apply? And what is its significance in this budget?
See, angel tax is a word which is used very popularly by, all these tax practitioners like us. Okay, it is nothing different. It is a part of income tax only. And it's a specific provision which has been provided under Income Tax Act, wherein it is proposing to levy tax on share premium which is being received by the company on issue of shares, and such issue of shares were at the rate which is exceeding the fair market value. So that being the case, this is a tax which is applicable to a company and not to an individual. Okay, it is applicable only when that company is issuing a share to any person and the value of shares issued is in excess of the fair market value. How to determine a fair market value? There are rules also. But it is this angel taxation is not having any impact on the individuals as such. It is having impact only on the companies. And henceforth, from this year onwards, this angel taxes, that is specific provision is 5672B. So that has been, removed from the statute.
One another major announcement which was made was on the security transaction tax on the futures and options. What are the changes? Why did it happen? And what are the consequences because of this?
The security transaction tax on for futures and options transaction was only 0.01%. That rate of STT has been increased to 0.02%. I mean, probably the intention is to encourage people for making them more and more investor friendly rather than trader friendly, so that they invest more in equities rather than they start doing more and more trading. So maybe probably that, or maybe a revenue earning avenue for the government, maybe because of that. But it is having only a small impact of 0.01% of the transaction value of F&O. So this is one impact of change in the STT.
Mr. Sriram, thank you very much for bringing all these points which are of relevance to the general public and NRI community in particular within such a short span of time. Dear viewers, please note, again to stress, these are the proposals. This is a finance bill. It needs to be debated in the parliament, and as per the wisdom of the parliament, amendments will be made to this finance bill, and finally, it will become Finance Act 2024. We need to wait till the Act is passed to know the exact provisions. If there are major deviations which will impact you, we'll definitely make one more video and bring it to your notice. Thank you, Sriram, for your time and efforts to bring it to the benefit of my audience. Thank you very much indeed.
You're welcome. You're welcome.
Dear viewers, hope the video that I've done today helped you to understand what changes have come into tax rules and regulations of India because of the budget 2024. If it helped you to understand the fine print, please do give me a thumbs up. If you are somebody who's watching the channel for the first time, or if you're yet to subscribe to the channel, please hit the subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, with yet another expert very, very soon.
Press the bell icon for more details and subscribe our channel.